Hey everybody, welcome back to the show. Today I want to look at Fidelity's cash management account. I think it's an excellent alternative to a traditional bank account. In fact, we're going to be moving a lot of our sort of checking account money over to a Fidelity Cash Management account. And I thought I'd walk through why in this video. So let's dive right in. This is, again, I'll leave links to everything below the video. This is the primary page for Fidelity's cash management account. And so a couple of things we need to understand right at the start. This is not a bank account. Now you'll see there's an FDIC insured option. We'll talk about that, but this is a cash management account. It's a brokerage account. This, not unlike the kind of account you'd open up to invest, say, in ETFs or stocks, but this one is designed to manage your cash. And what does that mean? Well, it means that it has sort of the checking account features that you would expect. You can order physical checks and write a check. You can get direct deposit into this account. You can see from the picture they have a debit card. And so you can use this, of course, to make purchases. You can also use it at the ATM to withdraw cash. So it very much functions like a checking account, and there are no fees to speak of that I can find. There's no sort of monthly maintenance fees. They reimburse all ATM fees globally. They don't, by the way, they don't reimburse any foreign transaction fee, but in terms of like an ATM fee to take out some money, they're going to reimburse that. Check writing is free, bill paying is free. So in that sense, it's an excellent, just checking account alternative. But having said that, you can get free checking in other places too. So what's so special about this? Well, you see it right at the top. What they do in this brokerage account, when you have money sitting in it that you're not going to use, Fidelity, will automatically move it to either this Fidelity money market account. It's ticker SPAXX. We'll look at it. And it's currently paying, this is as of August 9th, it's 7-day yield, 4.96%. What that means is the interest it's paid over the last 7 days, if you annualized it, it would come out to 4.96. You didn't actually earn 4.96% in 7 days. That would be phenomenal. But annually 4.96% at the moment. They also have an FDIC insured option. We'll talk about it as well. It's currently paying 2.72%. You might say, well, why in the world would you pick this over 4.96%? Again, we'll talk about it, but for some folks, they like the protection of FDIC insurance. So having said all of that, let's first look at SPAXX, S-P-A-X-X. Here it is. It's a Fidelity government money market fund. It's available in any sort of basic brokerage account at Fidelity. You don't have to have a cash management account to get access to it. And in fact, we own shares of SPAXX outside of Fidelity's cash management account, but this is one option that you can select as your core holding. In other words, when you deposit money into the cash management account, if you've selected this as your core holding, Fidelity will automatically just move it over into this fund for you. And then if you spend money, you write a check, you use the debit card, whatever, Fidelity will automatically pull the money back out of this account enough to cover whatever purchase you've made. We can see again, here's its yield. This is as of August 11th, 4.96, and it doesn't have any minimum to invest. You can see all the details about the fund here. You can see that it invests in a number of U.S. obligations, Treasury bills, Treasury strips, and zero. But we've got some floating rate securities, 21%, U.S. government repurchase agreements, 48%. So this is a very safe investment. It's not without risk, and in times of extreme financial crisis, think the Great Recession, 2008, 2009, some money market funds had some issues, and they call it breaking the buck, because the NAV on these funds, the net asset value, should always be $1, and 99% of the time they are, but occasionally they can actually run into some trouble, but really safe option. And so that's the first option. And the second one is an FDIC insured account, and it's up to, you can see it here, up to $5 million. It has FDIC insurance because, again, they use program banks. We've talked about this in the past, but if you select this as your core holding, Any money you deposit into the cash management account will get swept into this program, and they will then send your money out to various partner banks that they have. And that's why it has FDIC insurance, because all of these partner banks are member FDIC banks. But it's important to understand what those banks are. And in fact, we can come here. So what I did, just to show you where I got to, you can see this footnote 2. If we scroll down to footnote 2, you always want to read the details, right? You get this link to program banks. That takes you to this page. That's how I got here. And it starts to list some of the program banks. We can actually look at all of them. Many of them are going to be familiar to you, right? Citibank, U.S. Bank, there's Goldman, Citizens, let's see, Truist down here, Fifth Third, Flagstar, you've probably heard of, Wells Fargo, of course. So a lot of banks you've heard of. There's Discover Bank. The reason this list is important is that if you select this option and you're banking on that FDIC insurance, you want to make sure you don't have any separate accounts on your own directly within any of these banks, because that could affect the FDIC insurance limits. So if you had, say you had $250,000 in an account at Discover Bank, and then you put another $250,000 in the Fidelity Cash Management Account and selected this FDIC insured account option over here, and they swept some of your money into Discover Bank, it might not all be FDIC insured. And in fact, if we scroll down to footnote 2, we'll even see that right. You got to always read the details right here. Consumers are responsible for monitoring their total assets at each of the program banks to determine the extent of available FDIC insurance coverage in accordance with FDIC rules. So we want to be careful there. Now, I can tell you for our accounts, and at the moment we have a sum total of about $43 in our cash management account, but that's going to change. I can't give up 4.96%. This is my choice for the core investment. But of course, you'll pick whatever you are comfortable with. But the point is, with that kind of return, I'm not worried about keeping a lot of money in my checking account. In some ways, you could view this as a sort of a checking and savings account all wrapped into one. And so I'd be very comfortable keeping our entire emergency fund here. And the great thing about it is, if I need to use any of it, I don't have to log in and pull money out of a money market account or cash in some T-bills and make sure it gets to the right checking account so I can write a check. It's all wrapped into one account. I can just write that check and know that Fidelity will pull the necessary funds out of that, in this case for me, the money market account, to honor that check or ATM withdrawal or whatever it might be. Now, are there any limitations to this? Are there any downsides to it? Sure, of course there are. There always are. And in fact, let me show you a resource that I'll link to below the video. This comes from the Finance Buff website. It's a blog. And I've followed this site. I like it a lot. In fact, I've linked to a number of his articles in my weekly newsletter, which you can subscribe to with the link below this video. And he goes through great detail on the cash management account. I highly recommend this article. And by the way, it does have a routing number and account number, so no problem with transfers and direct deposits. But he has a list of limitations here. And just as an example, you can't deposit cash to this account. So if you and let me make this a little bigger, maybe a little bit. So if you have that need, it may be worth keeping some no fee checking account open at your local bank. There are other things that may be important to you. You can't have sub accounts. Not important to me, but I know a lot of people like sub-accounts. There are some limitations on recurring HCA, both outgoing and deposits. And so there's some limitations that you want to understand, but at least for me, not at all deal breakers, not even close. Again, I might keep a no-fee checking account open at a local bank just in case, but I'm not gonna keep much money in there, not when I can earn almost 5% at Fidelity. Now keep in mind, if we go back to the investment options, these two, and these are core options, meaning they're automated, right? The money will automatically go into whichever one you choose when you make deposits. These rates are going to change, right? If we had gone back in time when interest rates were near zero, these are going to be near zero, right? And of course, if interest rates go up, they go up. So you have to keep that in mind. The day could come when it may be possible to do better than these options at some other financial institution That being said, keep in mind that when rates were zero, they were pretty much zero everywhere. So it wasn't as if when rates were near zero, you could go to some bank and get a savings account that paid 3 or 4%. It really just wasn't possible, except on occasion you might be able to find something like that back in the day, but it was very, very limited. So maybe it only applied to, say, $5,000, that sort of thing. But I do want to stress these do change over time, and they will change. So you got to keep that in mind. Now, the other thing to note about this is that this cash management account, as I said before, is a brokerage account. So within this account, you could invest in other things. And in fact, this is something the finance buff talks about here in this article. I'll link to it. But for example, you could choose other money market funds. Now, if you were going to do that, you would have to physically go in and make the purchases and then sell them as needed when you needed the funds. Actually, some of that can be automated in terms of the selling part, but you'd have to go in and manually move the funds to make the purchases. So you can decide if that's worth it to you. This fund, for example, pays just a few basis points more than SPAXX. FZDXX pays even a bit more, 515, but there is a $100,000 minimum to invest in this particular fund. I will say for us, I'm probably likely just to stick with the core fund because of the simplicity of it, unless the differences became greater than 5 or 10 or even 20 basis points. That's just my approach because I like the convenience and simplicity. I will say another Finance Buff article that I'll link to, and I think it's worth checking out if you're interested, is sort of a review of the different Fidelity money market funds and which one might be best given your tax rates. Because keep in mind, some money market funds, if they invest in federal bonds, can be free of state taxes. There could be some other tax advantages with state-specific money market funds that might invest in municipal bonds. So it's worth checking this out if that kind of thing is of interest to you. So there you go. I know I've kind of gone over this somewhat quickly, but I'll leave links to everything I showed you. I really think the Fidelity money market account is something worth considering as a bank alternative. And by the way, if you have investment accounts at Fidelity, particularly traditional retirement accounts, and then you get into when you get old enough, you get into those required minimum distributions, there can be, I think, a real advantage to just having everything in one place. Those RMDs can get deposited right into your cash management account. That in turn can go into that high yield money market fund. Of course, you can always move it out of there anytime you want. You could reinvest it in whatever you want, either inside the CMA or could pull it out into a Fidelity brokerage account. So you're not locked into anything here, but I think just the convenience, at least for us, is worth a lot. So there you go. That's the Fidelity Cash Management Account, my take on it. If you have any questions, leave them in the comments below. I'll be happy to help you out any way I can. And until next time, remember, the best thing money can buy is financial freedom.